Hala acquires UAE startup payment.com, and Iran and China are inking economic and trade deals. You're watching The Daily Brief with Forbes. I'm Ramia Faraj. Saudi-based fintech company Hala has acquired UAE startup payment.com. Payment.com is a payment service provider regulated by the Abu Dhabi Global Markets Reg Lab and with offices across the UAE and Jordan. Payment.com serves more than 2,000 micro and small businesses by offering them a platform to support their offline to online journey, along with an integrated online payment solution. It's grown by over 250% in payment processing year over year. Emirates NBD has successfully priced a $200 million senior unsecured sukuk for real estate giant Damac. It's the third private placement arranged for Damac. The sukuk saw significant demand. The transaction size was increased to $200 million from $150 million. The sukuk comes with a 7.5% profit rate and matures on May 7, 2025. Damac recently told Forbes Middle East it will likely issue a public sukuk in the near term. Iran's President Ibrahim Raisi met his counterpart Xi Jinping today at the start of a three-day visit to China aimed at boosting trade and economic ties. Raisi is accompanied by a large delegation, including his central bank chief and ministers for oil and mining. He's expected to sign a number of MOUs with Xi. Iran and China already have strong economic ties, especially in energy, transit, agriculture, trade, and investment. In 2021, they signed a 25-year strategic cooperation pact. Eurozone GDP growth slowed in Q4 but stayed in positive territory, expanding by 0.1% quarter on quarter. Whole year 2022 GDP rose 1.9% over 2021. This was in line with the preliminary estimates on January 31st, which showed the Eurozone avoided a technical recession that had been expected earlier. Official data reveals employment rose more than expected, underlining the resilience of the labor market. Employment increased by 0.4% quarter on quarter, twice as fast as expected by economists. Ford says it's cutting 3,800 jobs in Europe over the next 3 years. Most of the job cuts will be in Britain and Germany as competition in the electric car sector intensifies. Ford says the decision is aimed at revitalizing its business in Europe and competing profitably with new lineup of passenger vehicles. Apple is reportedly facing challenges as it tries to increase production in India and shift away from China. At an Indian casings factory run by conglomerate Tata Group, only about half of the components from the production line are allegedly good enough to be sent to Apple's supplier Foxconn. This 50% yield doesn't meet Apple's goal for zero defects. Apple's expansion in India has been slow in part due to challenges in logistics, tariffs, and infrastructure. And staying in India, its Adani Group has appointed accountancy firm Grant Thornton for independent audits of some of its companies. It's in a bid to discredit claims by short seller Hindenburg Research that have battered its stocks and bonds. The conglomerate, led by billionaire Gautam Adani, has lost about $120 billion in market value in the last 3 weeks on the back of those claims. And that brings us to today's Forbes Real-Time Billionaires ranking, where Adani continues his losing streak, dropping $4.7 billion today, and now with net wealth of $53.5 billion. Our second biggest loser today is Elon Musk, down $1.4 billion with net wealth of $187.2 billion. And our third place loser is founder of Nigerian conglomerate BUA Group, Abdul Samad Rabiu, is down $560 million with net wealth of $7.1 billion. Check out our website and our social media for all of the latest Billionaires news. I'm Ramia Faraj. This is The Daily Brief. Thanks for watching. See you tomorrow.